Okay. So good morning, everyone. This is Simon with ToughTrader.com doing the market preview for ES, and we'll throw a little CL in there as well. Overnight, we have oil's off 33 cents. ES and NQ both advancing, up 4 on ES, 16 3/4 on NQ. No surprise there. Buyers are just in total control right now. Before I get started, let me throw this up real quick. Past performance is not indicative of future results. I have to put that down. You obviously have to be consistent, right? So just because you're consistent, all that means is if you had someone who killed it last year, they may not be killing it this year, right? Nothing works permanently. This is a constant game of move the coconuts and find a little ball underneath. You got to keep adjusting, right? You can lose a substantial amount of money trading futures, right? Have a trade plan. If you're trading by the seat of the pants, you're probably already in difficult position already. Don't keep losing money. If you consistently lose money, you're doing it wrong. On the day trading front, 85% of people lose money day trading, okay, or just fall off, one of the two. You have to have a true edge, and you have to be able to achieve consistently, right? That doesn't mean make profits every day. That doesn't even mean trade every day necessarily. It just means you have to execute your edge on a daily basis. Let's see if I got past performance. That's it. I'm really just sharing my trade plan with you in hopes that it makes you a better trader. Take a moment to read this legal notice if you'd like to, and let's roll on with the day. So we have risk off in CL. It's oil inventory days. CL was actually had pretty good range last night. Here, let me show y'all. We'll start with that. We'll roll into ES here in just a second. This is on the computer, mouse. These are the zones from last night. You can see we really never made it back to retest. That was the oil. This is oil inventories. This is early Asia right in here, and we've just been kind of climbing. We've never been able to retest all the way through European session. We haven't even really broken the pre-London swing low. This is what I'm talking about right here. This was London swing low, and we haven't broken it. If we do break it, we're likely to come down and test into this level. This is pretty decent support, right? So let me show you how that kind of connects. If you look at the overnight areas here, let's duplicate this chart. And then let's erase all these lines so that it's easier to see. Okay, so see all this right through here? Like this is all pretty good. If we throw up a volume profile on there we go. Okay, so if you look at all this, what you're going to see is a lot of value. See how you kind of have this cradle forming on the bottom here, right? So while yesterday looked like it was a down day, if you would draw a composite, meaning you took all of this, your point of control is going to land roughly right here. See that? Maybe right here. Let's see. 1, 2, 3. If I'm going to guess without actually drawing it, I'm going to put it right about here. So if we can't get below that 65.40 level, right? See all that value that built up, and now we have and we've gotten above it. And see how we keep testing. So see how we got above value from these 3 days, and see how we keep testing in now. We keep testing. We finally closed above. And we keep testing in. But for the most part, they just can't make any move below that 65.40. That's what the beginning of a base looks like right now. I'll grant you get underneath 65.30 down to the 65, right? And it's fair play for breaking that low. But right now it's building a base. And to me, it looks like, see how this looked over here? Just look at how, so instead of trying to figure out is it going to go up or down, just look at what it does. See when we build a base here, see how we started to push down and you started to get this cradle effect here. Or was it off to the left? Back in earlier in the month. There we go. So see when it pushed down? See how we form these little cradles and we get above and we roll, but they'll spend days trying to build this value area after a push down, right? And if you look at it at this point, you'll say, well, my gosh, it looks like it wants to roll lower, but look at, okay, so look how it keeps forming that cradle. See how it pushed down here? You say, oh, we're breaking down. But see that cradle gets built and it keeps testing into that cradle day after day. See that? Until finally you get a vertical move and out it goes. So see how, so I think we're kind of about right here. I think we're about right here in that build where we're testing down. Wow, I can't believe that went all the way back to the beginning. Let me grab that back. So this is important if you're going to understand where the market's going to trade. See how we built that cradle in here in March, and it kept testing down into it, testing down into it, testing down into it. See that build? They're pressing actually pretty hard down here to try to get it to break that lower level. But see how we built that value down underneath, and we started keeping, and we kept getting above. As you pull the days in and you go off to the right there, all it's doing is building a base for it to take off and push to the upside. See how we came back and backside tested it again, and we take off again. So if you look right now, what we're doing is we pushed all the way, all the way, all the way, all the way up. And we're now, I want to be right here. We're starting to build a cradle right through here. And as long as we push down through here, that should eventually result in coming back and at least retesting back up to that 68.40. My guess is the entire range is 64 to 68 right now. And I'm not intraday. CL trades two ways. There's no question about it. But my guess would be overall, we are looking for an excuse to come back and test up on that 67.60. Closing below 65 changes that picture substantially. And anytime you have inventory day, you have the potential of changing the fundamental picture. And when you change the fundamental picture, so this is what this becomes, right? Where you just get a long liquidation because of the picture has changed fundamentally here. This is a overnight inventory. This is essentially an inventory release out of the Middle East that showed there was a lot more oil being pumped out than was said before, and it changes the fundamentals. And now you have a new picture, and you have a lot of people trapped up above, right? But really, we've come off a price pretty good. We've really smoked the longs, smoked the longs pretty well. Who thought it was going to 100, and for a while there, I heard traders talking about being long only. It's really gone to a two-way market. I just want to be careful not to get bearish at the bottom when it's building a structure here. So I've already posted the chart up for most members in the room. And by the way, I want to throw away one other thing that I hear from new traders all the time. I hear people talking about correlation between ES and CL, and that is total BS. It doesn't exist, because if it did, ES would have dropped on its head when CL fell like that. ES would have dropped on its head. There's zero correlation. Throw the correlation away. If you're a day trader, it'll kill your trading. There's no correlation. Trade each individual chart for itself. Okay, so let's go over and jump over to ES. I can't believe I just moved that. Oh, but it's all right because, no, it's not. I'm going to go fix that now. Okay, we'll fix that later. Okay, 1 second here. Let's jump to ES. So first of all, on NQ, on the bearish thoughts, so that's the current state of the union on CL right now, and there is no bearishness going on there, okay? So if you're trying to get short, if you're thinking short thoughts about NQ, you're above support. This whole thing is support on that thing. If you're not below 7,000, I have no idea why you're even remotely thinking bearish thoughts. And I understand when I started trading, I get it. Because when I started trading, I had these thoughts of, oh, I'm going to capture the top, and oh, it's going to roll over, and I'm going to make all this money. Shorts are easier. If you'll look when we are actually short in a short market, shorts are easier after we gap down and break down back into support than they are trying to capture the top. Imagine how many people lost money trying to short up here, right? I know there's some superhero who caught the break, but we're day traders. You got to wait for the gap, the press back up, and then that's where you capture your short. This thing is in full bull mode, and what that results in, okay, because this thing's in full bull mode and just everything's firing properly on NQ. If you're not bullish on NQ right now at the top and you're a day trader, okay, if you're a fundamental trader or you know something else that I don't know about NQ, that's fine. I have no issue. If you're a guy who's like, hey, I'm shorting from here to 8,000 and I'm going to sit in it for 6 months, that's a different kind of short. But right now, see this? This is what results in this price action where it looks like, okay, so normally I'm going to give a great example of why shorts don't work right now. See this over here? Intraday just a couple of months ago. So this is a great example of how something worked great and then no longer works. So see this right here? When we close behind the 62 retrace? Okay, I'm going to duplicate this chart just without the zone so y'all can see this real quick. It's important to understanding how the nature of the market has changed. Okay, let us. Okay, so I'm going to go back. So see, right here. See this trade right here? So when we closed behind the 62 retrace, that was a death knell for NQ for months. Here, let me show you. Let me go back and give you an example of that. Okay, see this right here? From the swing low to the swing high. As soon as you close behind the 62 retrace, you got a beautiful long liquidation. Intraday, where we ran up like that, see, as soon as we closed behind the 62, it did bounce, but it was a precursor to a big, nasty, long liquidation. Same thing here. See this? This is all back in just last month, right? Closed behind the 62 retrace, see ya, right? And it happened over and over and over again. Same thing here. We push up, established behind the 62 retrace, long liquidation to the downside. Happened all over, and it's happened all year long when we were in down cycles. Okay, again here, if you see from swing low, swing high, close behind the 62, long liquidation. Okay, that because we're at the very peak top end of the range, that trade does not work as well anymore. If you keep trying to execute that short behind there, you're going to end up with this right here where everyone gets run over. And now we're trading all the way up to 72.40, somewhere up here. So that hat has flipped. What happens to traders? So let me explain why that's important in the cycle. That trade has worked pretty much since February all the way through the beginning of this month. Let's call it to June. That's February, March, April, and May. Okay. That's 4 months where it worked. The market goes through cycles. And the reason why you end up with traders with boom bust cycles is they go, this trade works. I found Shangri-La. I'm going to make a boatload of money, right? And they pound and pound and pound that trade. But what happens is the trade disappears, right? And once that trade disappears, they keep trying to make that trade work, and then they get run over. So it's just an observation thing. Wait till you look when we get behind the 62 retrace. If they start long liquidating again, which will probably come after a gap down and we start moving to the downside, you can put that trade back to work. Don't take the trade and throw it away. Just go, hey, it's a feather in my cap. I'm going to play it later. Let's jump over to ES. That's all I had to say about NQ. Buyers are in control. I'm looking to buy dips there. I'm not interested in shorting it. I understand you could have made a buku killing here, but you had to guess when it was going to stop going straight up, and that's a very hard thing to do. So let's get rid of this chart and go on to the next part. So on ES, let's look at the structure going into Fed day. Oh, that's not what I wanted. There we are. Okay. Okay, first thing I noticed, we're stair stepping up. See that? That's not a bearish pattern. Every dip is getting bought. We're having difficulty trading below the prior day's low. We one ticked below Monday's low yesterday and immediately found responsive buyers. So I know a couple of things. First of all, I know it's Fed day, which means there's a potential for rotation size to increase. Important to know. The release of news is at 1 o'clock Central Time. That there's a press conference at 1:30. Okay, and apparently from what I've been reading, I'm not a fundamental analyst, but the press conference is really important today. Okay, depending on how that statement, the press conference statement is worded, will be very, very important. And so I would actually expect some type of volatility today. There's usually not this much anticipation going in. Okay, so on the chart, and I've highlighted this on the chart I've posted to members, huge hole in the profile followed by an anomaly. We are likely to get a response somewhere between 27.77 and 27.72. The market likes to fill in holes. What we hope for on those holes is that we push in like this and push out. That's one option. But the other option is exactly what we did yesterday, where we sit there and just grind through one little area all day long to fill in the hole. And that was the primary objective of the market yesterday. We had a double distribution. I've gone through this multiple times. Double distributions, usually the second distribution, if you get whichever distribution is furthest away from where you open. So see how we opened here, tested down to the second distribution, pushed up, and we ping-ponged in between. We tested underneath the anomaly, closed back above, backside tested it, and then we pushed, and now we're trading 27.92.75, which fits us right back at the top end of the range. Double distributions are hard to break, and when you get to that second distribution, it's usually a pretty good bet we're going to rotate, okay? It was slow and grindy, so I'm looking for, this is your checklist in terms of what you're looking for. Comparing prior day's opening range to today's opening range. Is it bigger or smaller? the first hour range. I'm looking for when we get range expansion is important. Okay, range expansion indicates that the market's going to move in one direction or another. Right now we have very tiny ranges. It's taking like an hour to get 5 points, right? So I'm looking for that to expand. If all of a sudden I end up with a first hour that has a 15-point range, immediately push your key locations out. Go look at what's further away, and then also adjust what your potential for your trade is to gather due to the new rotation. Guys, fall asleep on this when we get into summertime. You got to be sensitive. Next, ask yourself, what are the areas the market's likely to find a response? And those areas are, okay, here to here, primarily, that's 77 to 72.50. We're trading at 92. That's a 20-point roll down. That's 2 standard rotations in ES at this point. I'm looking for a response out of here. I won't get it if it comes during the Fed meeting. I just won't trade that immediately. So, but if I had to put money on it, and I didn't have to put as much money as I usually do, okay, if I had to put a gentleman's bet, I bet $1,000 that was going to work, I would bet that was going to work. Okay. Next, below that is where the issue comes up. See how these points of control have all been covered up? See this through here? There's nothing underneath here to prevent us from trading down to 27.51. Now, I know this sounds weird where you're like, wait a minute, buyers are in control. Let me show you what I'm talking about so you understand why it's an issue, even if it doesn't come to fruition. Okay, so see here, if we were trading right here, and this is the market we were looking at, I'd go, hey guys, see how we keep pushing up and we keep getting responsive buyers? But there's an issue here because when I look behind, if we can get behind 27.22, and from this day, so this is a TPO profile, this is a volume profile. You only had the TPO point of control untested. The volume profile point of control had already been tested. So I would say on this day, when I look behind, see all those, oops, sorry. Let me start over again. Where the heck is it? There we go. Here we go. Sorry about that. Okay, let's start over again. So see this right here? I'll go back to this. Sorry, guys, I didn't have the chart up. It wasn't y'all. Okay. There's a hole in the profile here. But the bigger concern is, okay, this is, I know the chart says this hasn't been tested, but this was essentially tested yesterday. We missed it by like a tick. Okay, so I count this. This is a volume point of control that's been tested. Okay. All the points of control underneath this area. So let me erase these lines so y'all can see this clearly. Okay. There's a TPO point of control that has gone untested at 27.78, but the volume point of control from that same day has essentially been tested, which makes the TPO point of control weaker, okay, because you lose support from it. But if you look underneath, see how all the points of control underneath, I understand that there's support underneath, but all the points of control have been tested, and there's no 2 points of control that are together that are untested all the way down to 27.37. That is an issue for me because what that tells me is when you go back a couple months ago, okay, so see this, where we get this long liquidation here, okay, so if we look at the same area, okay, so when we were in the same area, I would say the same thing. We have resistance above, see how it hasn't been tested, but I would say all the points of control short of this on the 528 have been tested, right? And everything else has been covered up, which means we have the potential, right? If we get underneath value here to auction straight down. Now that doesn't mean it'll auction straight down. It just means the potential's there. So when you unfold the following day, see how we ripped straight through and straight down to that 2,700 and then past it, right? And if you look at this day on an individual basis, see how we came right down to that, almost to that point of control, bounced, held, then we busted it and came back up for backside test, right? So that's what my concern. And so see how this was really tiny range, really tiny range, really tiny range, and then we end up with just this massive range on this day. And that's because we only had 1 point of support that was available to us. And when we gapped down, we trapped all the buyers above. Okay, so I know that's pretty esoteric, but when you come back to it, you look to the right. See, now once it took out and tested this point of control and fixed this area, it was able to auction back up to this point of control back above, right? But the market chose to come back and shake out all the weak hands that were up here before going back up. That's normal price action. So when I look at this, I go, let's get back over here. I go, hey, look, almost all the points of control have been covered up, and the only two that are still together are all the way down here at 27.37. That's important because today's Fed day. So essentially at 1 p.m., the market can open up, quote unquote, with the new information. And if the information is deemed negative, it would be quite possible to come down to 27.37. Why? Because A, you get institutional players, B, you have new fundamental information, and that opens up the potential for a long liquidation, right? And if that were to occur, my guess would be 27.37 would be the downside target. Now, if we push up, there's very little resistance up ahead. The same story is true above. 28.3375 is the upside target. If the news is good, there's plenty of room to run on both sides. And if you'll notice, that move is close to equal. That's about 50 points down on the downside, and that's about 40 points up on the upside. And both of those have the potential. We have an environment that would create ease of movement, is what I'm trying to say. Okay. So with that being said, okay, this hole right here, first time in, should provide, or that 27.77 to 74.72 area, that should provide support. There's not much underneath that. You have this, but it's not very well defined. So somewhere between 58 and 51 is your next wide general area. And I would really say in there 54 to 51 if I was going to really pin it down to a complete area. And then if you bust that, there's an interesting area right there at 48.75 to 46. It's already on the chart. And then this is clearly strong support, and I'd be more than happy to take risk on at that point. Coming in on the upside, if people want to join me and have me tell them what the market's going to do, I have zero idea. I always trade according to what the algo tells me and where my support resistance are, and I just wait till it comes. I know people join me on YouTube and they're like, so I've gotten feedback that have told me that the way that I set up the trades is just confusing. Well, so the reason for that, so understand the reason for that, okay? Most, I won't call them charlatans, but people on YouTube want to act, or Twitter or FinTwit want to act like, hey, this is a certainty. I know what's going to happen. I have the opposite. I have no freaking idea what's going to happen. What I do know is where it's going to have a hard time jumping a particular price point. And when we get there, I'm likely to get a counter rotation and I can grab profit out of that area. Once you let go of having to know what the market's going to do and instead just let the market come to you, you will trade well. I want to address the trading error I made at the end of the day in just a minute. But the first upside, there's two little areas above here. So we have this 96, 98, 2800 is the psychological level if we hit it before the Fed, and then 2802 to 2805 is would make sense from a resistance standpoint. I'd like to see the over under. This 2811.75, that was the last swing high before we broke down. So you want to write that down. People will have that in their mind. You got to get above 2811.75 to break out and push. But that was the last swing high back in March before we rolled all the way down. People will have an eye on that. There's nothing there technically, but 2812 is going to become an important area just from a psychological standpoint. If you push back a little bit further, obviously 2833 is still the key there. If we look back to the left. Okay, so you can see this becomes the top of an open window right there at 2819. If y'all remember, that 2819 was pretty important on the way down. You can see that we had clear support through here. This is a support resistance area. The obvious target is above 2819 is 2831.75. I would not short between 2819 and 2831.75 if you paid me. Well, if you paid me, I would, but no one's going to pay you to do that because we're probably going to 31.75 once we're over 19. And then finally, this is your final scene of the crime where we broke down from, and that's the ultimate upside target before we break out to the upside at 28.88. So those are your two targets. Just realize outside of those resistance points, it would actually be quite easy to have a trend day up today on either side of that. Buyers are in control. I would look for dips. Usually we push up into the Fed meeting. The ideal setup for me is to actually get some sell pressure coming in the morning, then about 9:30, 10 o'clock, look for a reversal and a push back up to the upside into the Fed. For the gamblers in the group who like to play the Fed, right? What you're looking for is something like this. Now let's close some of this down. Close workspace. Okay, so what you're looking for. Okay, so let's pretend this is what it looks like, and yesterday was the Fed day. Okay. I'll try it. There we go. Okay. So what we would like to see is a drift. Let's say the market opened here. All right, ugly color. And let's say we drift down, 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 and you somehow finagle this long right here, right? And then it punches back up like this. What you want to do is move your stop break even and hope we don't get one of these whips back and forth like that to stop you out. What you're hoping for is just a straight up, it takes off and goes straight up. That's your best bet at capturing that move. You have to be willing to do two things to do that. A, you have to be willing to get stop run in a news environment, right? Number two, you have to be willing to give up whatever you got going into that Fed meeting, right? And number three, it's pretty hard to tell when you're going to sell it. You're basically holding your breath and hope it turns into a trend day up. And that can always be frustrating, right? Because you could get it, it could punch, come all the way back down, stop you out, and still end up closing at the high of the day. It's Fed. What else do you want? It's just hard, right? So now I want to talk about one other thing, and that's me following the algo and the conflict. I had a journal about it last night. I was really quite pissed at myself. So yesterday afternoon, the algo triggered me in. The algo perfectly triggered me in long right here. What sucked about this entry was because it was the geometry of how this worked out. We closed this bar on a beautiful delta divergence. I got triggered with a star trade right next to it, but the entire stop on that trade was here, 28.75. The low on that, 27.85.75. The low was 27.82.75, 3 points, plus another point behind it to make sure I survived. So 81.75. So that turned into a 4-point stop. I didn't have any P&L in ES yesterday. I was sitting around waiting. My first trade was a scratch. Okay. So I got cute and decided that I wanted to keep it to about a 3.25 point trade stop on that. Don't ask me what the difference is between 4 and 3.25, but that's what I decided to do. Okay. And I rolled my entry back to 27.85. The low was 27.85.25, and I then proceeded to miss a run. All I had to do was go 27.85.75. I'd have taken 2 ticks of heat, right? And in exchange for that, I got to run all the way up to 27.91. Instead, what I ended up with was 2 failed trades yesterday. One was the first long. It just took too long. I wasn't worried about it. That was a good trade. It just didn't work out, right? But this one was a bit of fear of trying to control. So what I was trying to do, I was tired. It was the end of the day. It's been a long day. I was trying to control my losses. I don't know. There's no difference to me between a 3-point stop and a 4-point stop, zero. But I, for some reason, decided there was, and I limited it at 27.85, and it cost me a beautiful long side trade at the end of the day. I didn't take this here, but this is beautiful momentum continuation to the upside. And I should have bought the calls right there as well. As soon as I noticed that there was fear, I should have just rolled into the calls. And that would have been actually those calls, I forget what I was trading or looking at, but they basically doubled on this move right here. So my 2 cents about that is what got in my way conflict-wise was I'm hesitant to trade in the last hour. I have a history of having some pretty bad beats in the last hour and over my 20 years. And so I hesitated is what happened, and I wasn't fully committed. I had another trader in the room who actually took to 27.85.75 and then immediately rolled his stop. Didn't even wait for this first bar to close and should have put at a minimum put the stop right there at 85.75. Instead, they moved their stop to break even, and it cost them a gorgeous trade as well. This is my point on that. The proper stop on the algo is the entries at the top. The stop is 1 point below. Unless you have some structure down here that you can find a point of control to cheat on the stop, but the stop is 1 point below. That'll keep you in the gross majority of a high odds winning trade, okay? And you will end up getting these wins on a pretty regular basis with the algo. So as we all know, it's been a high win rate, right? So I screwed up yesterday. It's totally on me. I should have had that winning trade. It wasn't a bad day, but it should have been a very profitable day. And basically what I've decided is, and what the rule is if I commit to taking the trade, I will take the entry at the proper location. I will take the proper stop, or I'll just say I'm not taking the trade, but I won't walk the middle line again, because that's the most frustrating, right? To be limited at 85, not get filled, and then watch it run really sucks. So anyways, that's my 2 cents on that, guys. I expect chop this morning in open auction because we're opening right inside. We're still inside this value area going back to Monday. We either got to get above or below to get any extension in range. So let them extend it. There's nothing bearish. The market's actually pretty damn bullish right now. Buyers are in control. I'm hoping for a dip to find a way to get long. That's my 2 cents. Does anyone have any questions? Is my trade plan clear? Tick divergence, 10-point rotations down, avoiding at least that early Fed trade. And on CL, I'll be avoiding CL until after inventory, right? So, and specifically 45 minutes to an hour after inventory, I won't be touching CL. But usually there's some good money there after the inventory number anyway, so you can wait, okay? One step at a time, one trade at a time. Control your risk. Not trading is okay when there's not any trades to be had. Trading poorly like I did yesterday afternoon is really not acceptable. I need to step that part of the game up. But the P&L will come as long as you don't dig into a hole. We're not missing much, guys. This is stair-stepping and balancing sideways. Almost every dip, if you can find a way to get in right now, is workable, and you'll know that's changed. The key to knowing that has changed is range expansion. So keep your eye on the range. If you see it dramatically increase, no, the rules have changed. You're going to have to adjust quickly. So let's get the algo up. Switch to 24 hours. There we go. Chart settings. First hour goes on 24 hours. And let's have the charts running. Let's pull this over. NQ's obviously gapped above last week's high, right? So the other thing to watch is NQ trades back below 72.42. Tech's on fire, so I don't see why it's going to fail. I'm not even thinking fail. I'm thinking if I'm trading NQ, which I'm not right now, if I'm trading NQ, I'm finding any way to get it long. ES is still below Tuesday's high, but you can see we have this double top. Usually triple test break. They don't hold. So there's always an exception to the rule. I would be keen off the fact that if we close back into last week's high, very likely that we roll back down to the downside. And this yellow zone's pretty important. Again, from yesterday, this zone's going to be pretty important to hold, and I'd look for tests in. The only adjustment you need to make on this is on your stop. Watch that they're not going to come down and test the gap, but they want to repair this area on the chart, and that should allow us to turn around and move back to the upside. And I'm watching for the algo to trigger us in, so I will lower that down, and now everyone can see the algo. And I'm basically will be taking my stars this morning up until about 11 o'clock, and then I'll go on hold until after the Fed. So anyone in the room have any questions? Am I clear on what the trade plan is for today? First touch of zones are valid touches. Okay. I want to say it again. First touch of zones, just like we're coming in right here, is a valid touch. We should get a response out of there. I'm just simply waiting for the algo to trigger me. It doesn't always trigger, right, guys? Sometimes I get the location right, and the algo just doesn't line up with it, and the trade works. It happened yesterday, and it happens multiple times. This is giving you an edge. These locations where the zones are giving you just big edge in this area. So please pay attention to it. Know that when you can combine the algo with location, you have huge odds of making really nice paydays on those. Algo outside the location still works. It just takes a little bit more of a seat of the pants drive to make sure you can get your extensions on it. Anyways, that's my 2 cents. Obviously, we're going opposite directions on ES and NQ. Let's see if they can't get them aligned. Hey, Scott, is everything going all right with the audio in the room, buddy? Hmm. Let's see if I can fix this. And for those of you who joined us on YouTube, manage manage your risk, guys. This is a wonderful business. You can make a lot of money, but you got to manage your risk, right? Know what your trade plan is. Don't guess. There's actually it's it's not that hard. Learn volume profile, read mind over markets, get to know your market really, really well and how it operates, and then do the obvious, right? Look at what the market's doing and go, what is it trying to do? Is it trying to go up or is it trying to go down? And how good a job is it doing it? Is it doing at accomplishing that job? So yes, it's trying to go up. It's if you think it's trying to go down, it's doing a horrible job of going down. Okay, so is NQ. So if you think it's trying to go down, and then your definition of down is very different than my definition of down because it doesn't look like anyone wants to sell it to me, right? When they show up, they'll show up, but right now it looks like you're just jockeying with everyone else to see who can get the best position for the long side of the trade. So see how we came right off the top, well, almost off the top. I think we missed by a tick right there off the yellow zone, and that's normal. Globex low landed right at the back of this yellow zone. That's normal too. So I expect a quiet morning, and I'm hoping for some type of setup that let me grab a few points prior to the Fed. If no one has any questions, guys, on YouTube, thank y'all for joining. I'm going to go fill up my coffee cup. I'll be right back, guys.